What's going on, guys? Hope everyone's doing well, and let's dive right into today's video. So we're going to start off with this clip from Paul Barron's YouTube channel. Highly recommend watching this full thing with the CPA discussing if President Trump will eliminate capital gains on US crypto projects. Now, we know that this would be one hell of a catalyst if this does go through, and if it does, when will it go through, for the projects that are made in the United States. So there are a bunch of altcoins with sizable market caps. I mean, this list goes on and on. A huge majority in the top 50, which is really good to see, and it goes even longer.
His agenda to get people investing, building, buying, manufacturing, all the above in the United States. Mm-hmm. And so one way to do that is to say, hey, if you're a crypto investor, buy some tokens that are based out of the United States. And when you go to sell it, after 12 months, by the way, capital gain is after a 12-month hold. So you traders don't get, gleamy-eyed here. But after I hold this token for at least 12 months, I might get a reduced capital gains rate. Mm-hmm. And that's going to help. And why would he do that? Because it stimulates the economy in the United States. It creates jobs in the United States. What extent? But that's the theory. And I think in a perfect world, it'd be exciting. I just hope that the tokens I like are, going to be here in the US.
Yeah.
Always number one, my investors out there, you invest in what you know is best. Who cares if I can save between 15 to 20% on the tax bill, tax rate? I want to buy what makes freaking sense. Then it happens to align with a US-based opportunity, great. But let's not chase that. Let's chase what we know and is going to make us money, and then hopefully they coincide.
Yeah. Well, I think that's the point, is you look at some of the projects that we talk about here on the show quite a bit. Most of them are, well, quite a few of them are based here in the US, even though it seems as though there's a lot of the blockchain companies now vying for the idea to make sure that Trump and the administration knows they're a US-based company. Ripple, you got guys over at XRP, obviously, and then places, projects like Solana, Avalanche, et cetera, that have kind of gotten that. Hedera is another one.
So I thought that was really interesting, and of course, we all want no capital gains or reduced capital gains rates, especially for long-term holdings in the United States. I think that would be a very good thing, a positive development for the crypto space, and lead to everybody walking away with more money, and potentially even a lot more money invested into this space. However, at the same time, and surprise, surprise, we are seeing the IRS doing everything they can to position themselves to maximize tax revenue for any future bull runs, with the new FIFO being almost the default method, unless people know to use Spec ID, and the really tightening reporting rules. Maybe not this year, but especially going forward. There are some things going on this year, but even 2026 and going forward with the 1099-DA and some other regulations, I think that audits could be more common. The IRS has that AI tool to track wallets. I think it could be a bigger headache in the future, so I hope as we get more regulatory frameworks, things become more simple and less complex, but we'll see. Whenever I see news about regulations or the administration talking about their plans, I'm also looking at the other side of what the IRS is doing, and I'm kind of just thinking, how are they positioning themselves to make as much money in future bull cycles? Because don't be fooled, that is their goal. Same things with these banks and issuers with these spot ETFs. All of these groups want to make money off of performance fees, management fees, etc. So we'll keep moving on, but for anybody that is serious about being an actual investor in the crypto space, check out the video I uploaded before this one. We went through tax strategy, the new tax regulations, and a lot more is coming in the future. There are different types of investors. You can tell one investor, oh, you have to have 4 exchanges to be able to access this asset or use a DEX, and they're like, oh, I don't want to create another account or KYC. So they don't want to, but there's some people that will do everything they can to make as much money as possible and set their foundations up properly. All right, next up, shared by Anders. So a great screenshot from David Schwartz in 2019. I know for a fact that we covered this multiple times, but this still rings true. We're seeing RWAs, or the tokenization of them, on-chain increase, and we're seeing more and more stablecoins. Even with central bank digital currencies, and I don't want central bank digital currencies to be a thing, but we're still going to see these governments being the central authority for their fiat currencies. They still need to have a neutral settlement asset between them. Feel free to pause the video and read through this, but we've gone over this a bunch and this still rings true. Alright, next up, I saw All in Crypto share some big news for Algorand. So recently, Algorand successfully handled 34,000 transactions in a single block. So they group all of these transactions into a block and had a 100% success rate. It was far cheaper than it would have been on Ethereum or Solana. I'll make sure this is retweeted and we can go right to his blog, and he actually links the on-chain data so we can actually see the exact block that costed just over 34 algo. So on Algorand, transactions are grouped into blocks before they're being confirmed, and this recent news means that they settled a major block with 34,000 transactions in a single block, and everything was permanently validated and verified on Algorand's blockchain. And he says the block exceeded Algorand's average TPS or transactions per second speed by 20% at 12,000 TPS. And Algorand's blockchain is another example of the few networks that have never gone offline, which is good to see. They're also a US-based crypto project. So we can see, we recently saw a big block on Algorand with 34,000 transactions. The total cost of the block was just under $9. If it was on Solana, it'd be over $600 or over $21,000 on Ethereum. So this is really just emphasizing the finality, the low-cost transactions, the potential in the future, and high speed, and this could be a really good thing for the growth of Algorand's DeFi ecosystem when DeFi starts picking up again. And we also know earlier this month, the CFTC, right on their website, announced a crypto CEO forum to launch digital asset markets pilot. So we can see a few organizations or participants included. So we have Circle, Coinbase, Crypto.com, MoonPay, and Ripple. So once again, digital asset marketplaces are going to be the future, expanding the use of non-cash collateral through DLT. We can also see right here this pilot program or this digital asset markets pilot program for tokenized non-cash collateral such as stablecoins right there. We'll talk more about price charts in the future, but we've gone over everything with expectations in the monthly and the weekly time frame, so I'll definitely cover Bitcoin if we end up backtesting the 8-month EMA, because I think a lot of people would be freaking out in that case. Also take a hit, everybody's saying what's going on. We're still holding the structure for another cycle, as long as we keep these monthly candle bodies holding above this orange moving average, which is the 8-month EMA, along with Bitcoin dominance. So Bitcoin dominance is still up, it's climbing. If that climbs and Bitcoin pulls back, alts can go a bit lower. No matter how you look at it, we're in a range just like back here and back here. It could be shorter, but we are still sitting above the previous cycle top. So I'm waiting for this range to chop up, down, hold this level, and then pop higher. We're almost 2 months into 2025. We still have plenty of time for this year. So for all I know, Bitcoin could just kind of be ranging and hold well above the 8-month EMA, but in the case that it does come down to the 8-month EMA and Bitcoin dominance stays the same or even climbs, alts can go a lot lower, and I know everybody's going to say, what's going on? I say it's this relationship like we've seen. And this is not financial advice for anybody, but I strongly believe when we see the crash of Bitcoin dominance like we have every single cycle, that is when alts rise, and I believe that happens this year. So I can keep hoping and guessing where the top for Bitcoin dominance is going to be, but when we actually get the top and the crash, not just, a 10% drop, a real sizable 20-30% plus crash back to the lows, filling this gap, that's when alts go up. At least the highest majority of altcoins, and I believe that happens this year despite boredom or even fear over the coming months. Alright, super quick, so we have Good Morning Crypto sharing a clip of Aiden Ross, and we've talked about this before, and you'll see a lot of podcasts talking about this for gaming and the future of crypto. So he even goes on to say there will be a crypto coin backed by my server. A lot of people would follow his lead. We're going to see likely crypto projects or crypto marketplaces, Web3 types of integrations with a lot of these new games in the future, even GTA 6. It shouldn't surprise you. However, what we are looking at is when you're looking at GameFi, I think on charts.cointrader.pro, gaming tokens are, in terms of dominance, are at all-time lows, which surprises me because I believe gaming is going to be a huge part of crypto in the future. So I definitely think there's going to be a big shift in narrative to gaming. I think that gaming is going to have future cycles. We're just not quite there right now, but I do think there's going to be a big narrative shift later in the cycle. All right, next up, we've shared by Tata. You can follow them at HBAR Tata. So we have some big news. We have Canary Funds files for an HBAR spot ETF with NASDAQ, and he did link it down below. Now, this shouldn't surprise anybody. We are going to see spot ETFs for more alts in the future. There are a variety of applications for XRP and many others. The question is, are we going to get them this year? Based on the inflows for Bitcoin, I'm surprised that Ethereum's is still low, but we already talked about that previously. I definitely believe that we are going to see at least some altcoin spot ETFs go live by the end of this year. I do see VanEck, which is another large issuer for Solana and a bunch of other assets, mock Canary Capital, so I do think that's interesting. I don't know if it's politics, but we'll find out. All right, next up, shared by Reuters. So there was a very large hack by Bybit, a crypto exchange. $1.5 billion worth of crypto was stolen in an Ether wallet hack. If you want to hear more about this straight from the source, the CEO of Bybit did host a live Twitter Spaces or a live stream that goes over everything. We can see right here, more than 60 million users worldwide use Bybit. Bybit is solvent. Even if this hack loss is not recovered, all of client assets are one-to-one backed, and we can cover the loss. So at least that's reassuring to hear. So I'm unable to use the Bybit exchange, but I'm hoping that any listeners that use Bybit, hopefully your assets are okay and hopefully you get that money back. If they do end up covering the loss, I'm just not sure how that process will look and how distributions would look. It could be a little bit of a headache, but hopefully everything is all right and it doesn't impact the crypto space too dramatically. But overall, I mean, we're likely going to see more of these in the future, just like usual. All right, next up, so this just came out by Ripple. We have a new bank that is built on Ripple custody. So we have Deca Bank is rolling out crypto trading and custody services for institutions. Now, I know I just went over the Bybit hack. I don't know enough about it or the ins and outs and exactly what happened, but I want to emphasize that institutional grade crypto custody, especially with qualified custodians and MPC security, it's almost impossible to hack. Now, maybe when you bring up quantum and AI technology in the future, we'll see. But this type of infrastructure is set up to be incredibly secure. So we have right here, shared by CoinDesk, Deca Bank, with over 370 billion euros in AUM, is emphasizing security and regulatory compliance. So a major German financial institution, we can see in US dollars, almost $400 billion in AUM. So they've introduced cryptocurrency trading and custody services for institutional clients after almost 2 years of development. This group is fully regulated, so we got regulatory approval for a crypto custody license from BaFin while operating under the supervision of the European Central Bank. What's interesting about this article is there is no mention of Ripple custody, so when I do a control find for Ripple, there is no mention whatsoever. So I don't know if it's due to NDAs or keeping it quiet, but just knowing that Ripple the company, their actual verified page with 3 million followers, literally just tweeted this out, built on Ripple custody, I believe them, but it's just strange that CoinDesk never wants to mention Ripple. And Ripple custody is legitimate. Anybody that does their own research and looks at Ripple custody with Medico below them, work with IBM, all these huge groups and major banks, I am far too zoomed in to actually look at this page, my bad. Now, could this just be that Deca Bank wants to keep it hush-hush? Yes, but a lot of retail investors don't realize how much politics is really in the crypto space when it comes to exchange listings, or even getting recognized by some big news outlets. As crazy as it sounds, there really are board members on big exchanges, I don't want to name any, and other crypto projects that have beef with each other and past issues, so they try to really blacklist each other. And obviously the same thing can be said about XRP. We know XRP's been hated by major Bitcoin, Ethereum, Solana holders forever. Wait until we see the hate at new all-time highs. And last but not least, we have iTrustCapital linked in the top of the YouTube video description and the link tree and right in the top of the pinned comments. I've had a crypto Roth IRA with iTrustCapital since January of 2020. For anybody that wants 24/7, 365 trading where you actually own the actual crypto asset and it can grow tax-free in a Roth IRA, check them out. And there are plenty of other account types that you can create on iTrustCapital doing rollovers or creating a new separate account like a SEP IRA if you're a small business owner for higher contribution limits. But I really love the idea of a crypto Roth IRA for tax-free growth, thinking about Bitcoin or even XRP back in 2013, because I'm not retiring anytime soon, at least in terms of age. So that is what I want working for me long-term, because crypto's risk-reward is very asymmetric. I can still have a Roth IRA in the S&P 500. I could still hold bonds, even though I have no interest in bonds. But overall, yeah, love iTrustCapital. Check them out. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.